What's that line about time keeps on ticking into the future? Well, so it is in the Ottawa real estate market, and we're here with the June 2026 market snapshot with a couple insights on what's going on. So, quickly, we've got 1,518 sales in the month of June in Ottawa, or in the Ottawa Real Estate Board, on 4,982 active listings. So that represents about 3.3 months of staying inventory with an average sale price of 733,648. So if we take a look at how that looks kind of seasonally, what we're seeing is a slight reduction in sales from a month ago, and that's seasonal, and we will continue likely seeing reductions as we go forward. We know that in most years in Ottawa, either April or May tends to be the highest number of sales. And in this particular year, it ended up being May. So sales volume is still good, but inventory is also up. So 49.82 in terms of inventory on the 15.18 sales. That's versus 49.17 last month with a higher sales volume. So what happens when, more listings and a little bit less sales? Well, what happens is we end up with more months of standing inventory. So if we look at this kind of from a year over year perspective, keeping in mind 2025 was not a banner year, right? So if we looked at a 10-year average, things changed quite a bit. So anyways, from last year, we're up 1.5% on price, so almost negligible. We're backwards on sales volume from June of a year ago, and we're up on inventory. So 5.2% fewer sales than last year, which wasn't a great year. 14.5% greater levels of inventory or active listings. So what does that mean? Well, it means two things. There's a 22% increase in months of inventory, which translates to a 14.5% increase in number of listings. So, hey, more to look at for buyers, and kind of flat in terms of sales. If we break down by property type, the story changes a little bit. And I don't know, I guess if I was to put my speculative hat on, I would say that this is a story of affordability. So the single family homes are actually up a little bit on price by 1% over a year ago. And there's only 2.8 months of standing inventory on those. So, they're moving quite well. You would actually call 2.8 months of staying inventory a market that is favoring sellers. It certainly feels like that from a buyer standpoint, as there's multiple offers in some cases, et cetera. So that's what's happening there, kind of prices holding, et cetera. But when we look at the townhomes, we're actually backwards on price by 3%. That's an and we've got a little bit more inventory. So I think this is probably a function of it being difficult to break into the market. It's also a function of the rebates that have come in from the federal government, where we've got rebates on new construction. So it happens to the resale market when the new inventory, which usually isn't direct competition, but it is competition for some, when those prices go down, it stands to reason that it puts a little bit of downwards pressure on the resale market as well. Not everyone's cross shopping, most aren't, but you're looking over there at, hey, that townhome's $650 new and it's $700 to buy a resale. You know what the buyers start thinking. The apartments continue to be kind of the unfortunate spot in our market. 5.3 months of standing inventory. Prices are up a little bit this year. But the inventory is coming down. The fact that there's not really a lot of new projects on the go is probably going to be good for condos long term. But right now, it's still kind of a buyer's market in the condos, or very close to it, and quite frustrating for buyers when they're trying to get rid of a condo. And again, I think that's really a very entry-level product, meaning it's a first-time home buyer's product, and that market has been squeezed. The affordability is really challenging. So for the single family owner, they have a trading card. They've got something in all likelihood that they're selling. And so you can see more activity, less inventory there. So the markets where there's an upgrade happening seem to be doing okay. The markets that are a start, struggling more. Hey, nothing crazy new here to share. With the standing inventory, I expect that we'll continue with this kind of balanced feel. Highlights in certain neighborhoods on certain products, but generally speaking, one in four homes selling every month, and one in three homes selling every month, and lots to look at. And buyers tend to lack motivation in this type of market. No one's in a hurry. So let's see what July brings, but my suspicion is it's much the same. We'll find out.